recent trends in securities laws in India. Welcome to this video where we'll be talking about securities markets, also known as the financial markets or capital markets. Securities markets are places where you can buy and sell various financial instruments like stocks, bonds, currencies, and derivatives. The capital market is an essential component of any economy. It provides a platform for businesses and governments to raise long-term financing. Unlike the money market, where short-term securities with maturities of less than a year are traded, the capital market deals with the longer-term securities that have maturities of more than a year. These markets are essential for individuals, institutions, and companies to raise capital, manage risks, and invest in different financial instruments. In securities markets, buyers and sellers come together to trade securities based on market demand and supply. The price of a security is determined by the forces of supply and demand, which can fluctuate depending on various economic and market conditions. Securities market can be divided into two categories: primary and secondary markets. In the primary market, securities are issued and sold for the first time, typically by companies or governments raising capital. This market is essential for entities to raise funds for investment, expansion, or other ventures. On the other hand, in the secondary market, existing securities are traded among investors without the involvement of the issuer. This market enables investors to buy and sell securities based on market demand and supply. It is an important platform for investors to realize their returns on investment and manage their portfolios. Securities markets are not just important for raising capital and managing investments, they also provide valuable insights into the broader economy. These markets are influenced by various economic and market conditions, and the performance is often an indicator of economic health and stability. In summary, securities markets are crucial components of the financial ecosystem, enabling investment and risk management while providing valuable insights into economic trends. Whether you're an individual investor or a company looking to raise capital, understanding how securities markets work is crucial for navigating the financial landscape. An overview of securities laws in India: regulation for the protection and development of the securities markets. First up, we have the Securities and Exchange Board of India Act 1992, which established the Securities and Exchange Board of India, SEBI, as the regulatory body for the securities markets in India. SEBI has broad powers to regulate the securities markets, protect investors, and promote the development of the securities markets. Next, we have the Companies Act 2013, which regulates the formation, management, and operations of companies in India. It also contains provisions related to securities issuances, disclosures, and shareholder rights. The Securities Contracts Regulation Act 1956 comes next, which regulates the trading of securities in India and provides SEBI with the power to regulate and oversee the activities of stock exchanges and other security markets. Moving on, the Depositories Act 1996 governs the functioning of depositories in India, which are institutions that hold securities on behalf of investors in electronic form. The Securities and Exchange Board of India Listing Obligations and Disclosure Requirements Regulations 2015 govern the listing of securities on Indian stock exchanges and set out various obligations and disclosure requirements for listed companies. Lastly, we have the Securities and Exchange Board of India Substantial Acquisition of Shares and Takeovers Regulations 2011, which govern the acquisition of shares and takeovers of listed companies in India and provide a framework for the protection of minority shareholders. So those are some of the main securities laws in India. Exploring the recent trends in securities laws. Today, we will be discussing the recent trends in securities laws in India and some significant developments in Indian securities laws since 2020 until March 2023. First off, the Securities and Exchange Board of India, SEBI, has been working hard to modernize and digitize India's securities markets. It issued a circular on November 23, 2020, which introduced a unified payments interface (UPI) mechanism and online interface for public debt securities. This system aimed to simplify the process of subscribing to debt securities for retail investors, encourage household investors to be part of the debt market, and increase the investors' base. In another move, SEBI circular dated 9th December 2020 directed listed entities to provide an e-voting facility to shareholders. This facility aimed to ease out the task of casting a vote for the shareholders and eliminates the need for registration with e-voting service providers (ESP) and authentication from the point of depository. The system required shareholders to cast their vote directly through their dematerialized accounts, demat accounts, with the depositories which will forward the votes to the ESPs. SEBI has also proposed amendments to Regulation 31A of SEBI Listing Obligations and Disclosure Requirements Regulation 2015, which outlines the rules for reclassification of promoters. Secondly, SEBI has increased its regulatory oversight of securities markets in India to prevent fraud, improve market integrity, and protect investors. This has led to stricter enforcement of disclosure requirements, more frequent inspection of market participants, and the introduction of penalties and other sanctions for non-compliance. We also have the proposed amendments by the REIT and the Investment IT regulation by SEBI. This move aims to provide greater flexibility to issuers and more opportunities for investors to participate in these instruments. Moving on, SEBI has also clarified certain aspects of the FPI regulations, including the use of demat accounts, beneficial ownership, and compliance requirements for FPIs. This is an important development for foreign investors looking to invest in India. In May 2022, SEBI announced changes to regulations governing the share buyback process. This included the requirements for the company to complete the buyback within 3 months of opening the offer and mandatory disclosures related to buybacks. In June 2022, SEBI amended the insider trading regulations, which included the introduction of new definitions, clarification on the obligation to make disclosures, and the requirement for companies to maintain a digital database of persons who have access to unpublished price-sensitive information. Also, SEBI issued guidelines for listed companies on the use of social media in August 2022. These guidelines provides a framework for companies to communicate with investors and other stakeholders through social media while ensuring compliance with securities laws. Recent news update in the securities market in India. Now, let's talk about some recent news updates in the securities market in India. Firstly, the Indian stock market experienced a bull run with the BSE Sensex reaching record highs in early 2021. Secondly, SEBI introduced several new regulations aimed at improving transparency and investor protection, including new rules on the disclosure of loan defaults by listed companies and increased disclosure requirements for mutual funds. Thirdly, the Reserve Bank of India announced plans to set up a central bank digital currency, CBDC, which could potentially transform the payments landscape in India. The Indian government announces plan to privatize several state-owned companies, including 2 public sector banks and 1 general insurance company. Finance Minister Nirmala Sitharaman, in her budget 2021 to 22, had announced a big-ticket privatization agenda, which included 2 public sector banks and 1 general insurance company. Also, the Finance Act 2021 passed by the Indian Parliament made significant amendments to financial laws in India, including the Securities Contracts Regulation Act 1956. This act decriminalizes several offenses and introduces a new settlement mechanism for disputes between investors and intermediaries. This act also empowers SEBI to regulate insider trading, fraudulent and unfair trade practices, and conduct of intermediaries, giving them more power to investigate, adjudicate, and penalize any violations of the SCRA. In addition, market infrastructure institutions such as stock exchanges, clearing corporations, and depositories are now recognized as systemically important entities. These changes aim to strengthen the securities market and protect the investors' interest. In their board meeting held on March 29, 2023, SEBI has announced some significant measures aimed at ensuring the protection of investors and bolstering the market infrastructure to tackle any dislocations. SEBI's proposed measures include a range of safeguards that prioritize investors' interests, making sure that their investments are protected in the best possible way. Anticipated economic trends for India in 2023. It is anticipated that Indian economy may face a longer path to recovery in 2023. One of the key reasons for this could be the modernization of consumer spending due to the impact of inflation and higher borrowing rates. On the other hand, investments are expected to be primary growth drivers, with the government sector leading the way in capital spending. While the private sector may take some time to catch up, they are likely to continue targeted spending on specific projects, as was observed in the previous year. Overall, the Indian economy may require sustained efforts for various stakeholders to achieve sustainable growth in the coming year. According to the International Monetary Fund (IMF), India's economy surpassed that of the United Kingdom in 2022 to become the fifth largest in the world with a 7.2 growth forecast for financial year 2023. That's an impressive feat, especially given the ongoing global headwinds. One of the key factors behind India's success is its large domestic market, which provides robust demand for goods and services. In fact, a recent World Bank report highlights that India's economy has proved remarkably resilient to the ongoing impacts of the deteriorating external environment, growing faster than most major emerging market economies. So, there you have it. India's economy is growing stronger day by day, thanks to its large domestic market and resilient banking system. That's it for today's video. We hope you found this information useful. If you have any questions or comments, please feel free to leave them down below. Don't forget to subscribe to our channel for more finance related content. Thanks for watching.